Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be truthful with yourself. When you're truthful with yourself, you start to see everything as it is, not the way you wanted to see it. The wounds of your emotional body are covered by the denial system. When you look at the wounds with the eyes of truth, you can finally heal those wounds. Market-wise, let's take a look at it out here. Dow Industrials down 22, NASDAQ up 6, S&P's flat. Gold contract down $4.20, trading at $1,222 an ounce. Silver up 8 cents at $16.34 an ounce. Copper flat at $2.10 a pound. Light sweet crude off 24 cents, $49.32 a barrel. The oil market did get over that 50 bucks today, folks. Bonds, the 10-year notes up 12 ticks, 129.27. 30-year bond up 22 ticks, 164.09. Now, the notes and the bonds both went topside with price spread with volume. What does that indicate? That indicates we have Janet Yellen talking tomorrow at 1:15. Bottom line, the Fed is saying that they want to go up on rates. The market is saying you can say you want to go up on rates as much as you want, but we're going to bring the rates down. King dollar. King dollar down 185 ticks, trading out at 95.15. The euro is trading at $1.11, and the yen is at 109.75. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we're coming into the holiday weekend. You're coming into window dressing also. The SPY is at $209.34. Wednesday, we did volume of 95 million. Yesterday, we did 79. Today, we did 52. So it's setting up really nice coming into the swing point. Tomorrow, I suspect we'll do even less than that. The high of the 20th of April is $210.92. The low of that high is $209.39. Now, so this is wild. Yesterday, so we'll check out. So this is a second test of the low of the high. You know, yesterday we got to a price point of $209.72, yet you closed under the low of the high of the 20th, which is $209.39. We did the same thing today. That being said, my take, folks, is that it's going to get to the top of this. And the reason I'm saying that has to do with, let's go over to the NASDAQ. It has to do with the NASDAQ. So we go to the 3 Qs. What do you have with the 3 Qs? 3 Qs today, up 32 cents. You're at $109.56. You have a big contraction of volume. There's no doubt about that. The high yesterday was $109.57. Today, you did $109.70. Yesterday, you did volume of 38 million. Today, 20. What the Qs have done is that they're closing right at the high of yesterday. So that's saying that the Qs can get up into the $110.15. That's pretty good run. It's not huge, pretty good run. If that's what you get, they'll bring up the S&Ps. The Dow Industrials, what do you have inside the Dow? So volume-wise out here was short volume in the indices also. Inside the indices we did 788 million versus 913 million on the NYSE. We did 1.5 billion versus 1.8 on the NASDAQ composite. Well, actually, let's go to the composite next, because the composite is also going to suck this NDX 100 up as well as the S&Ps. So the composite closed up $6. We're at 49.01. The high of yesterday was 49.05. The gap, the top of the gap is 49.21. We're right next to it. And the gap to close that baby is 49.32. You know, so you get about 32, 33 points in order to close that. I do expect you're going to get that closed. Gold contract. What do we have with gold? And this is where it's going to get wild tomorrow. There's no doubt. Because what you have tomorrow is this. Excuse me. We not only have the holiday, Memorial Day, so that means that when gold trades, folks, the U.S. market is the dictator in gold just about 23 hours a day. What happens is that gold closes, the pit closes, so when the pit is closing, okay, that's when large operators, meaning the mining stocks, the gold banks, that's when they're trading off of, because they want to make sure if someone's selling thousands of ounces of gold, meaning the producers, that they have a valid pit price. So that closes at 1:30 and does not open again until normally Monday at 8:20. So what we're going to have tomorrow is that we're going to be closed. You know, the pit will close at 1:30. You'll have electronic trading that will, go on for, by 4 or 5 more hours. Then what you're going to have is that you're going to have on Sunday night, it's actually going to be Asia that will actually start trading, because Asia will be open Monday. What will happen there is that Asia, equity-wise, won't move things around quite a bit, because when we're actually on vacation, markets right down around the world slow down. Okay, so now let's go back to the gold contract. What do we do out here today? We got to a price point of 1237. It couldn't hold price. You're at 1222. That being said, if we go over to the dollar index couldn't hold price. So your probability is that whatever Yellen is going to say tomorrow is going to bring the dollar lower, bring gold higher as we come into the weekend. The dollar came down today with 18,500 contracts, and we're at $95.14. Anything under $95.40 is keeping you in the lower range. On the 3rd of May, bottom line, the dollar got down to 91.88. The way that baby is setting up is saying dollar continues to want lower price. If we go over and we take a look at the bond market, what you're going to see, the bond market is screaming. And this is amazing, actually, because what's happening in the bond market, so if we take a look at the notes did 1.6 million contracts. Now, this is in the face that the Fed is saying, you had the federal governors coming out the last couple of weeks saying, hey, we think we can raise in June. Well, the market's saying, you know what? You can raise in June, but you're not going to affect this bond market because there's more buyers than there are bonds. And bonds are going higher, price-wise, lower in yield. And I think what that sets up is that after this window dressing, you can say, see ya, don't want to be ya. You stay right there, folks. We're coming right back.